Let's start out, though, with initial jobless claims, 230,000, much higher than the estimate. And we all know that it takes a while sometimes for the post-GPS of holidays, but this most likely is more of an Omicron event. Last month, of course, 207,000, so we jumped 23,000. Revisions, I'm sure, may be forthcoming. But here's the big news. Finally, continuing claims get to pre-pandemic levels. Okay, you know, we were looking at numbers in the low 1.7 million area. Those were March of 2020. We're now 1,559,000. Let's put it this way. We haven't been under 1.7 million since, January? So these are really good numbers on continuing claims. Now, let's go to the inflation numbers, shall we? For the December read on Producer Price Index, headline number, half of expectations, up 0.2. The high water mark here was January of last year at 1.2. If we look at ex-food and energy, as expected, up 0.5%. The high water mark here was April of 21 at 1.1. And finally, if we look at ex-food, energy, and trade, it is up 0.4. Call it a tenth light. The high water mark there was 1.0. That was in January of last year. Now, these are the biggies, the year-over-year numbers. If we look at year-over-year headline, it's 9.7%, which is another record. And do keep in mind, we're only going back to 2010 here because they changed the calculation of Producer Price Index. But basically, we have been making records year over year in this series every month since March of last year. Now, if we look at ex-food and energy year over year, 8.3, same thing. We've been doing record after record since April of last year. This is the highest read at 8.3. And finally, ex-food, energy, and trade year over year, 6.9%, as expected, equaling our last look at 6.9. All this is still unrevised, and that equals the highest ever at 6.9. So just like Consumer Price Index, the Producer Price Index year-over-year numbers are hot, hot, hot. But they're exactly as expected, except for the core number, which was 8.3 versus the expectations of 8. And the 7.7 last look was also the all-time high. How's the market digesting this? We're still a whisker under 1.74% in 10-year note yields. On a closing basis, of course, we're a couple basis points under the highest close of the year, and indeed the highest close of a couple of years. And many scratch their heads. But once again, inflation and how the market processes it and how the Fed deals with it is an ongoing process in the midst of QE with almost a $9 trillion balance sheet. So if you think you know where that red dot is, you are here. You're smarter than most.
Shepard Smith here. Thanks for watching CNBC on YouTube.